Good morning, traders. It is Tuesday, 8:01 a.m. Chicago time, the 3rd of February, 2015. Thanks for joining me as always. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Pretty light news flow overnight. Not much there to report. The DAX made fresh all-time highs. Greek equities have risen over 7% amid a new debt proposal. Um, Greek finance minister, as you may have heard, has been making a tour of Europe, drumming up further support for Greece's economy. It's clear that despite the rhetoric from the election campaign, the presidential election campaign for Greece, the new government is not all that gung-ho about just cutting off the deals that have been made for prior debt from the Eurozone. They're doing what they can to keep the relationship going. So that was part of the news yesterday that came in that caused the push up. In addition to talks between Russian separatists and the Ukraine about an air traffic corridor, which paves the way for further discussion. I don't know that those talks went anywhere, but at least they're getting back to the table. So that's really it for news. Believe it or not, the Shanghai trades sharply higher this morning on expectation that there will be further easing by the PBOC. Looking ahead at what's on deck for today, at 8:45, 15 minutes after the open, we have January ISM New York, no estimate. That's a minor number. At 9 o'clock, a half hour after the cash open, we have February IBD tip economic optimism expecting 51.4. Also at 9 o'clock, we have U.S. December factory orders expecting negative 2.2 contraction there. At 9, also, we have Fed's Bullard is discussing the economy in Newark, Delaware. At 10:30 Central, we have a Treasury to sell 52-week and 4-week bills. At 10:45, we have Fed's Kosher Lakota speaking on the economy in St. Paul's, Minnesota. And then at 1 o'clock, we have President Obama. I believe he's going to speak on the budget, the proposed budget. And then at 3:30, just 15 minutes after the pit close, the index pit close, we have weekly API oil inventories. And then this evening at 4 p.m. Central, 5 Eastern, we have the domestic vehicle sales numbers. And then later on this evening at 7:45 Central, China's HSBC Services PMI comes in. Now, if you remember, HSBC Manufacturing and Services PMI caused a very sharp correction back, I think, in August. They missed quite deeply. And that's really it. Again, looking ahead for the week, tomorrow, European Services PMI, US ADP, US Services PMI, and crude oil. Thursday, Bank of England rate decision, initial claims, trade balance, and Fed's Rosengren. Again, Friday is the key day here. We're building up for. It is the US non-farm payrolls and unemployment in the morning at 7:30 Central. 8:30 Eastern, and then the Baker Hughes rig count, which surprised last Friday and caused an 8% spike up in crude oil. We'll pay attention to that this time. Consumer credit and Fed's Lockhart for Friday. That's how the week's shaping up. Let's switch gears and look at what we've done technically. Overall, just really fantastic auction material here. The market has desperately tried to push out of balance the balance that we've been in for quite some time. From October 31st, there's one big massive composite, but also the balance that have been put in since the high. So if I extend this out to October 31st, you can see that despite this massive selling on Wednesday, just like I talked about yesterday in the Trader Bite, despite all the selling, really we have not accomplished anything. We're just basically sitting around, still trading in value, still trading in balance, unable to breach the 81.25. Unable to breach the 81.25 and just not getting anywhere. It's until yesterday, and then yesterday we were able to push through. And then we found buyers on the dip. So overall, we've had an impulsive move down, also an impulsive move on the gap. Gaps are technically impulsive, and we have a continuation move here. Then we had a pretty deep pullback, but then looking at this larger move, I wish I had a bigger cursor to draw on here with. We had yesterday doing just a picture perfect completion or extension move, and then a correction up. The area that it tagged on the correction is the MC VPOC. Okay, so from the high, so let's look at this black line right here. This is the MC VPOC that was hit yesterday. So what we did is we finally broke through and closed the naked point of control at 80, which has been around for quite some time. We pushed down into the CLVN, which was at 73.25. We stopped 2 ticks ahead of it. And then we found buyers and pushed right back up. The initial target, for those of you who heard me on daytradingradio.com, when the markets was at 1991 at approximately 10 o'clock Central, 11 Eastern, I had said that by the end of the day, the expectation is for it to test 2005, and it pushed 2004, pulled all the way back pretty deep, 20 points. All the way back. It looked like it was done. It was going to miss the target by 4 ticks, and then it turned around and pushed through, and pushed further by 14 points, all the way up to 1850. 1850 again is the MC point of control. So this morning, when the market reopened, it pulled back and it tested down to the low volume node, which is what's expected. I expected it to test this 2010 neckline, and a push through would bring us back down towards the 22,003. It went to 2007 again. This is the overnight session, so it doesn't follow the auction as cleanly as the day session does. And then buyers stepped in during the European session. Again, as I said, the DAX making new all-time highs, and we have what looks like a short covering P-shaped profile with the high at none other than 2028. If you recall, 2028 is this high volume node that we've had for a long time. 2028 also represents the MC point of control for this red composite area. This red area represents all of the volume that has traded since October 31st pop up, and the balance that we've been in for a long time now. And essentially, 2028 is the most traded price, followed by 2060, and then 2048 beneath that. So from here, what are our expectations? It looks like we're stuck in this 2028 coming into the open. I expect some responsive selling. There's some decent support in the 2018, 2019 area. I'm looking for that to be tested. I expect this point of control to be closed at 2023. And then I'm looking for the market to actually sell through through yesterday's low volume node. Why? Because it's imbalanced. We've been here a billion times already. And 2028 is an area where the market's likely to get tangled. You can see here the high volume node that's created. And so my expectation is as it breaks below the 2375, 2350, it's likely to test the next high volume node from yesterday, and then it's likely to test through into this low volume node zone that we left behind. Easier to see again in the in the market profile version. You could see that there's some singles all the way down to 2004 quarter, and that's what I'm looking for if it sells off. That's my primary hypothesis. Because we are in balance, you notice here we test down early and push up, test up early, push down, test down early, push up, and I expect the same. I expect it to breach overnight high. Sellers step in this high volume node. I expect it to rotate over and push back down to 2018, and then push through into the prior day's range. And if that's the case, then and it gets through this 2013 area, I'm looking for 2003 to be tested from where we are. That's 20 points away. That's my primary idea for the day. Secondary idea, which has a pretty good chance, I would say 40-60 chance, is for it to immediately get responsive selling back into the 2018-2019 area, potentially push through by a little bit into 2013, and then find buyers and start walking back up to 2028, get tangled for a little bit, and then start moving its way back up into this kind of short-term double top area in the 37-38 region for today. So that puts us from the low, that puts us at about 17 points up, which is about what we would expect on an up day. So that's it. That's what I'm looking for, and the reasons. Hopefully, the intent for these Trader Bites is to share with you what I believe is the proper way to approach the market, no matter what you do. Remember, volume profiling, excuse me, volume profiling is not a trading system. It is something you can overlay over your fibs, your indicators, moving averages, whatever you do. Volume profiling simply shows you where the auction took place and where prices were accepted and where they were not. So you can use whatever you want to use, PNF charts, time charts, volume charts, tick charts, Renkos, whatever. If you throw a volume profile on there, it'll show you where the auction actually took place rather than what time says in the form of a bar finishing or what volume says in the form of a bar finishing. So it's an important way to look at this, and that's the purpose of these Trader Bites, is to create kind of a nation of context thinkers rather than people who are constantly chasing the next great indicator that works and doesn't work, or some signal system. So that's my goal. That's why I started a prop shop a long time ago. I wanted to influence the lives of people who want to do this for a living. It's the best job in the world, and it's the worst job in the world, depending on what your alignment is with the market, and that's a fact. Euro stocks, still in balance. 33.70 point of control is 33.73, which played beautifully over the last few days. Here's a 33.73 test from below and a break lower a couple days ago on Friday. Here it is by a tick, break lower. Here it is by a tick, break down as well. And now we've pushed through it. Yesterday we pushed through from above. So the expectation for the Euro stocks is for it to get responsive at some point and come back to this 33.70 area. MC point of control, but overall this product is completely imbalanced since these highs that were made for the year. Has not pulled back much, but has not pushed much. And again, we're in a composite LVN zone all the way up to 35.50. So eventually, in the intermediate term, the expectation is for it to continue higher. But for now, it is balancing and it is accumulating a decent amount of volume. You can see that there's pretty good kurtosis here. Nice belly that's offset a little bit. But beautiful belly, beautiful balance here, very methodical product. I love this product. And you don't have to deal with all the member, non-member nonsense that the CME imposes on its participants. So even though I'm a member. So that's where we are with the Euro stocks, and a quick view of crude oil. Crude oil is doing its thing. It's definitely pushed a lot higher than I expected in the immediate future. I did expect it to, while it was down in the 44, 45 area, I expected a rotation up to 49. 20, and I expected it to be stuck between 49.50 and 47.50 or so in the thick of this balance zone, but it keeps climbing. Participants there are anticipating that supply is likely to start to dry up, pushing prices higher as demand stays consistent. Anyway, that's where we are with crude oil. Crude oil in the short term has gotten a little bit ahead of itself. There are two impulsive moves that have taken place. I expect a correction, and then the correction would likely rotate back down to 48.90. And retest the MC point of control. I'll leave you with that. Good luck today, and I'll catch you tomorrow. Take care. Oh, by the way, I'm on Big Mike Trading today. I'll shoot the link out through Twitter. I'm on for an AMA, a 2-hour AMA. Ask whatever you want. Just show up and ask questions if you have any. And so I'll post a link for that. That'll be 3:30 Central, 4:30 Eastern. I'll catch you there. Take care.